Welcome to Bullshift, the podcast, where we talk about personal finance from the perspective of behavioral economics. My name is John DeGuy. I am the author of the book Bullshift and the host of the podcast. Thanks for joining us. My guest this week is Tim Herron, and Tim is considered to be a governance expert. He comes with 25 years of personal board experience and a background in the financial services industry, as well as many years of governance training. He's currently the chair of the investment committee of the Presbyterian Church of Canada. He's the chair of the STEM Fellowship Organization. He's a past board member of the GTA Institute of Corporate Directors, which is the ICD, and a current board member of St. Andrews Hall Seminary on the UBC campus. And when he's not diving into board documents or biographies, he can be found at what he calls his cottage, which is the Thornhill Golf Club. Tim, so nice to have you here. How are you today?
Very well, thanks, John.
Now, because you're a governance expert, the things we're going to be talking about this week are a little bit different from what I talk about with other people. You've got a background in finance, and so that's all fine and well. But for this episode, I wanted to sort of talk more about how there's a connection, similarities, and maybe sometimes not so much between what goes on in giving financial advice and the blind spots that advisors might have and the things that investors need to think about, and also the role of good governance when you're serving on a board. So I wonder if we can start by talking about that, the role of an advisor versus the role of a board member. Maybe if you can share what you think are the similarities and differences.
Well, both of us we fall under different acts. You fall under, things that come out of the Ontario Securities Commissions, whether they're national instruments or those types of legal documents. Similarly, on our side of the fence, as a board member, we have duties of loyalty, duties of care, duties of obedience. And then we also have ethical standards that we need to adhere to. And I think when we look at what you do and what I do is we are both stewards, we're fiduciaries. And I know that's a big word that you have worked with over the number of years that I've known you, John. And I think, you manage risks and we manage risks, and your risks and our risks aren't only financial. But a lot of it is the funds and the organization, and ensuring that the charity or not-for-profit adheres to many of these legal standards.
Just to clarify, the fiduciaries that's a word that's used for portfolio managers because portfolio managers have discretion, and as a result, that makes them fiduciaries. But just for the sake of clarity for the people listening, if you're just a traditional advisor who works on a consultative basis, you're not a fiduciary, which is a bit of maybe a sore spot within the industry, but nonetheless, it's there. Wondering if you could maybe talk a little more specifically about the need to have an evidence-based approach and managing risk, both in terms of managing risk on the investment side, but also managing risk as a corporate director and having the interest of the corporation being taken into account as well.
Okay. One of the things I want to talk about is there is a difference between not-for-profits and charities, and however, the roles of the board are both the same. And then if you look at compared to a corporate board or for-profit board, we are still held to the same standard. So going back to the evidence base is we have to make sure that documents are filed, we have our filings that go in on an annualized basis. We've got to make sure that under Charities Directorate or under some of the acts that we are adhering to those. One of the boards that I sit on that's a nonprofit is we have to adhere to the standards or the acts of the Insurance Company Act, and that's the one where I sit on for the Presbyterian Church. So I run a portfolio of $650 million. There is an OSC exemption that we are given that allows us not to issue prospectuses or certain documents. However, the unit holders of the church or that have funds that we administer on their behalf, we have to provide them with annualized statements. We have to provide them with materials from our consultant. We have to go through a custodian, all the things that you as a financial advisor, you at your organization utilize, whether it's a registered plan or a non-registered plan, is because there's two pools of funds that I run. Now they fall under similar acts. One is an endowment slash foundational funds, and those are the funds of the church and other churches within the Presbyterian organization, but also a defined benefit plan. And so it falls under the Pension Benefit Act. So, when you come back to evidence base, are we adhering to the principles of good governance? And those are standards that are set out for individuals in my role and the group that I have gathered that I bring around the table, who are the board members or the committee members. So, we know that when we go into a meeting that we adhere to Robert's rules. For instance, as we constitute the meeting, we adjourn the meeting, we have motions throughout. So, there are minutes that are being kept. And if anyone, wants a set of minutes. So those are evidence-based that we as board members or committee members are doing the best that we can as prudent people for managing the funds, but also good stewards as board members.
So let's jump off from that, talking about stewardship, to talk about the ongoing trade-off between risk minimization and return maximization. Where would you say that line is drawn if you're working as a fiduciary on behalf of a collective number of people on a board or an organization, a charity, and maybe again offer your thoughts as to how to compare and contrast that when you're working with individual families and their risk return trade-offs?
Okay, you have a set of skills, John, that you come at it from both the length of time that you've been there, but also who you rely on.
Right.
You rely on the money managers, you rely on the organization that you have, you rely on certain research that comes to you on an ongoing basis. We basically, one of the things that I have done is I put together a skill set matrix. I don't know everything about the business yet. I think you purported that I was an expert in this area. What I am an expert in is getting people with other skill sets. So if I look around the table of the different boards that I sit on or the different committees, is that I have, and let's go to the one that I manage that it is specifically for the funds of the church. So I have 3 CFAs or chartered financial analysts. So they bring skill sets over X number of years. One gentleman who runs well over $200 million and has been in the industry for 45 years. I have another individual who is CFA CA. If I go down to my second line on defense, I have a securities lawyer who is one of the individuals that I rely on when it's regarding any of the exemptions, or are we adhering to what I talked about before. And I also have a technology expert. Now, if I go into the risk mitigation side of things, I also have an actuary from one of the provincial bodies, and her role is to provide us updates regarding our defined benefit plan. So we're adhering to some of the CAPSA standards or some of the standards that are now coming down regarding defined benefits. Sitting on my bench, I've got somebody with an expertise in ETFs or exchange traded funds. I've got someone just recently who brings to her skill sets in the area of alternatives. And those alternatives could be infrastructure, they could be real estate. Mm-hmm. So what we do is we'll put together a portfolio, but we also have an outside consultant. And the outside consultant will put together all the information on a quarterly basis, and then we discuss it at ours. But one of the things that we have prided ourselves on is making sure that we will ask the questions. We will ask the questions. I know that returns are paramount to individuals. Green is good and red is not so good. And I think in the last year, we've all had challenges on our portfolios. And now is where we have to basically step up and say, what was it that caused have these negative returns. Was it rising interest rates? Check, yes. Was it lower equity prices? Check, yes. But then one of the things that I do, John, is make sure that I take a longer term view. And I do this both from a board perspective, but also on the return basis. And what I mean by that is I don't look at this from a 1 month, 6 month, 1 year, but for the defined benefit plan, my concern, and it should be for board members on a pension plan, is it's not what's happening now, but what's going to happen over the next 30 years. I'm more concerned about the 70-year-old who's going to live to 100. So that's on that side of things. On the foundation and the endowment side of things, one of my concerns is, are we providing a 3 to 4% distribution or ability to provide funds for ongoing services, ongoing programs, ongoing things of the church? One of the other ones that I sit on is we basically are funding education. So if we have a $500,000 endowment or restricted set of funds, and I'm going to earn 5%, that's $25,000. Do I make sure that on an ongoing basis, it's 25 or 20 or 15 that can be utilized specifically for certain programs within the organization? So I take both a short-term view of it, but I also take a longer-term view. One of the things that I've asked of the consultants that we've used is, let's use a 4-year rolling, or let's use a 7-year rolling. And let's make sure that also I have ongoing conversations, that I act as a bit of a coach for the committee, for the charity, but also that I'm in contact because of my background being, on your side of the fence, but also I was, I worked for one of the fund companies, and I was coming to you on an ongoing basis with the products, that services that we were offering. So I understand both sides of the fence, and I want to make sure that my conversations with the individuals that I have that are my asset managers in some cases, or the information that I'm getting, in today's day and age, is we adhere to a set of bylaws, we adhere to a set of policies and procedures. Any funds that I run, we run through a statement of investment policies and procedures. Let's make sure we're adhering to those. So, from a risk perspective, you've probably talked. I know that I looked through the list of the number of podcasts that you've done in the past, and you talk to the individuals about, CPP, or you talk to them about financial planning.
Okay.
And to a certain extent, I have to keep that in my mind in my role sitting on these boards. So, I look as much now as I do ahead, John, just to make sure what are the trends that are going on that are going to affect us. We've had the last 3 years, we've been in COVID or COVID lockdown, or whatever you want to call it. And what it's done is it's changed the landscape. All my meetings used to be from either a charitable organization, or even the ones that are non-charitable or not-for-profit, is we used to have them as we would meet. They were in person. We went online. We all got comfortable with Zoom, with Teams, with WebEx, all these different things where, you get to see, my office, or in this case, my wife's office. But the point is we're now in a new world where it's a combination of the two, and you have different meetings and you have different discussions when it's on a Zoom call versus an in-person call. So, coming back to, do the problems exist? In some cases, it's different challenges, but I think the solutions are, what is the best for your client, or in our case, what is the best for the unit holder, the shareholder, or those who's that we're serving.
3 things I took from that segment. One is that your expectations that you're setting are often in the 3 to 5% range, which I think is telling, because that's the ballpark that I tell people is reasonable given the assumptions guidelines that CFP registrants are supposed to use, and that's a concern that I have, that it's not particularly well enforced or necessarily used the same way across the standard. The second thing that I took was that you're taking a collaborative approach, that you're working with CFAs, with securities lawyers, with other people, and similarly in the financial services industry, people we'll have people who do research, we'll have research departments, but they'll also have people who have expertise in estate planning and tax planning and whatnot, insurance that can be drawn on so that advisors can do a more robust job in offering true, complete, comprehensive wealth management. So that's the second similarity that I found. And then the third thing that I think might be a similarity, but also a bit of a contrast, and that is that what you're doing is taking a true forward-looking approach. And the concern that I have is that many people who offer advice to retail clients look backward and work on the assumption that the past is prologue for the future, and not all. I'm just saying, maybe even many is an overstatement. Maybe it's just some, but I think it's actually much more helpful to try to get a handle on what the world is going to look like down the road, and then to prepare for to use the Wayne Gretzky phrase, to go to where the puck is going. So I think that's reassuring that that's the way you're looking at things as well. Wondering if you could talk a little bit about what needs to change with regard to governance, and to the extent that it dovetails into financial advice, that as well, and specifically misguided beliefs. Are there things that people believe to be true that are perhaps not necessarily true that could be taken into account when giving advice?
Sure. And I think you're talking about from my perspective as it
Sure.
relates back to NFP and charitable boards. And I think one of the things that needs to change is that individuals, when they come to a board, is that there has to be certain expectations of them, or expectations from them back to what they're going to gain from the board.
Mhm.
When you go on a corporate board, a lot of the times you go on because you're going to be paid.
Mhm.
Okay, going on to a NFP board, a not-for-profit board, or a charitable board, you're a volunteer there.
Right.
And it's very, very cut and dry as to that aspect of compensation. It's outlined in the Income Tax Act is, as a board member, not an officer, but as a board member, you're not allowed to be paid. You can have your expenses covered, that's fine. But so it comes back to the misguidedness, some cases, John, of thinking that you're there because you're going to gain something. You're there because you're going to have contacts.
Mhm.
I go into this with a number of things that, when I've been asked to be on probably 3 or 4 more boards than I actually am, and I've turned them down because it's my expectation of what are the skill sets that you want of me to come on. Is it my financial background? Is it my understanding of governance? Is it, I am not a CA.
Mhm.
I do not, I understand financial statements, both income statements, balance sheets, all that kind of things. So I can hold my own in that regard. But I also understand where my blind spots are. And I think one of the things that happens is people start to sort of agree. And it really comes down in some cases to the culture that's created,
Mhm.
and certain cultures of certain organizations. And unfortunately, I think we've heard of 2 cultures most recently, one being the We Charity that came up back in 2020, and then the other most recently of Hockey Canada. And I don't want to get into either one of them, but I
Right.
think what's happened is it's pointed to you've had some very good people who've come on the boards, but then, there's been a series of events or a series of events prior to them coming on the boards that they haven't looked into. One of the first things I do, John, is that when I go into a board, is I ask them about their directors and officers insurance. And it's not just that I want to know that they have it or how much it is, because, I want to make sure that I'm not being sued at some point in time for some negligence that took place. But I also want to see a certificate. So it's the Ronald Reagan Trust and Verify, is I want to make sure that I and my family are covered off for the things that I do or the things that others on the board. Because don't forget, we are one voice coming out of a board meeting or coming out of the actions that we do. So, the misguidedness is that it's something other than, there is a purpose for charities. There is a purpose for non-for-profits, and that's how, under registration that you come into these things, whether it be health, whether it be education, whether it be for the betterment of, certain situations, but that you're not doing it for reasons other than, selfish reasons. And that's one of the things that's misguided. By joining a board, I'm going to be able to enhance the business that I have, my day-to-day business. And if you go into it with that and not with the servient mindset, that's where you get into trouble.
I'm wondering if you can maybe expand a bit on the notion of groupthink. One of the things that I have talked about in Bullshift is that there's a certain culture within the financial services industry of herding and the desire to conform to the dominant mindset of what other people are doing and how other people are thinking. Do you find that as well on boards? That after a while, if the problem with groupthink is that if there's one person who's the most powerful, he or she might say, "I want to have an open discussion," and then that person, the most powerful person, will make the comment first as to what he or she wants, and suddenly there's a desire on the part of all the other people that are subservient to that person to fall in line, and instead of offering their personal independent views, what they really get is they find a way to parrot the view that was offered from the top because they want to fit in. Do you see that on boards as well?
Absolutely. You took one of the words that I just wrote down, and it's called tone from the top. And it was something that I learned when I took my corporate directors program at Rotman back in 2000. And interesting enough is I took my course in 2008-9, and I think we know what was going on at that point in time. And there was a lot of bad actors that. So I'm going to switch over to culture, and I think oftentimes what happens is you have a group of people with the different skill sets, but also different biases. Because I think one of the things that we all come into these roles with certain biases. And one of the things that I try and do, John, is and this is me, is I always try and play the other side of the car.
Yeah.
And I try and push my boards, my committees to think differently. Is if we were on the side of the individual, let's say the pensioner, what is it that we would like to see? Or, I'll give you a real life example this morning. Is we're putting out our first quarter communique to the unit holders for the church, and it's obviously not been pretty. So I don't want to tell them that it was pretty, and but hold on. However, I want realistic expectations. So coming back to it is, what are the blind spots? What are we missing here? And collectively, the fact that I have 12 or 8 or 5 people around the table, we all come at it from different. We have diversity of gender, we have diversity, but the biggest one for me, John, is diversity of thought.
Mm-hmm.
And I think that's where, what are the things that we aren't looking at? And sometimes by having an outside consultant who is completely non-arm's length from us, and it's an individual that I've worked with and I've gotten to know, and you have to understand sometimes that relationships can be confrontational. And I don't mean that in a negative way. When I say confrontational, it's providing you with a perspective that you didn't think of.
Mm-hmm.
And if we go down this route of which, this is what one outcome may be, this is what a second outcome, or this might be, what's the worst case scenario here? We buy GICs, we know what we're going to get. We go into equity funds, we don't know what we're going to get. However, if you're talking about a dividend fund, it's interesting is I started in the business in 1982, and I remember sitting with an individual who unfortunately has passed away many years ago. However, he was a very, very smart man. And I said, Jim, what are you selling today? And he said, Bell. And I said, Bell Canada? And he says, yes, Bell. And I said, why? What's the premise? What is it that you, he goes, a 6% dividend, widows and orphans, and everyone has a phone. That was in 1982, okay? But it was the 6% dividend, the widows and orphans. And I bring that up because oftentimes we think of the sexy thing, or we think of, you experienced it with your clients over the last, they'll come to you and ask you, why am I not investing in crypto? Why am I not investing in, 20 years ago, we all had to be in technology. We all had to be in something that was going to go up far greater. The last 4 years, we've had zero 0% on bonds and fixed income GICs. Today is a different environment. So me thinking as a board member or thinking as a chair is we talked about the 3, 4, 5. Why don't I just put everything into GICs or into government guaranteed products and get my 3, 4, 5?
Right.
However, for the sustainability of this organization, because we may have, when we went from 0 to 5, we gained in the cash flow, but we lost in the on the valuation of the bonds. So I think going back to it is we've got to make sure that we don't panic. That
Right.
the rule that Warren Buffett came up with is don't lose money, and then the second rule is remember rule 1. So
Right.
I think in terms of what are the outcomes that we're actually looking for, and do we need to course correct along the way?
Right.
I said that we look at things on an annualized basis, but I also want to make sure from a 4-year and 7-year basis is that we're doing what we say we're going to do and test it. I
Right.
want to make sure that from a governance perspective is that I don't show up on the front page of the Globe and Mail or the Toronto Star or any newspaper across Canada because of something that I did that I shouldn't have done.
The risk return trade off is a bit of a moving target as well. We talked about that earlier in the episode here. But the funny thing is, mentioning how interest rates were at zero throughout all of pretty much 2020 and 2021. And the phrase that people used to use was TINA, there is no alternative. People had to invest in stocks because real estate was sky high and bonds were paying next to nothing. And so money went into stocks, not because people thought stocks represented good value, but because there was very poor value in everything else, and it was the least undesirable, not necessarily desirable of and by itself, but on a relative basis. And it's interesting how if you've got a role to play where you're offering stewardship for other people and you've got to look out for their interests, sometimes it can be a challenge because you've got to be aware of how the sands might shift, and you've got to think about what would they want. As you say, I think the idea of putting yourself in the shoes of the pensioner or the person who is receiving money from the organization in whatever way is an important perspective to have, and I think it's one that is sometimes lost when you have these discussions. I'm wondering if you could talk about awareness, perception, evaluation, maintenance, just the various sorts of things that come into play when you're doing your role as a board member.
Um, some of it we've already talked about is, what is your awareness? Are you aware of the changing landscape that's going on in the not-for-profit world or the charitable world? We're constantly seeing headlines of reduced budgets. We're seeing, charities that are emerging. So, am I aware of that? Recently I was just out in Calgary, and one of the things that I was doing while I was out there, because I sit on an educational board, is I was talking to 2 other organizations that are in the Indigenous area, and to see whether or not, from a collaborative standpoint, that we could join up and use some of the programs that they're utilizing with the Indigenous youth, both at high school and in university. So I have to be aware of what the landscape and what the changing of it is. On the perception is, again, coming back to the perception, when I see headlines that say there's reduced amount of money for donations and in Canada it's down X number of dollars, I see that, John, as an opportunity. And really what it is it tells me that there are many organizations that aren't running their business like a business, or they're not running their organization, whether it be a nonprofit or charity, like a business. And I don't mean that strictly from a profit standpoint. Is that if you have a group of staff, how are you training your staff? How are you onboarding your staff? How are you onboarding your board? How are you bringing them? What policies, procedures, and especially on the procedure side of things? And are you making sure that you're hitting, in the accounting business and in the legal business, there's an education that has to go on an annualized basis, no different than what happens in your business.
Mhm.
You're required to, on annualized basis to do, X number of years there. So from a perception is that you come on a board or you come on into an organization and that's it. One of the things that I've done and I continue to do is education.
Mhm.
And I do that from the standpoint last year, actually in 2021, I brought in two experts in the area of crypto. And the reason why I did it was because I knew that we were going to be asked about that particular quote unquote investment, of which it's not. I think it's more speculation in the concept of it. But I brought in someone who had spent the last previous 3 years on putting together an ETF in that area. I wanted to understand that it wasn't something for us, that the risk level was way too much. But I wanted people around the table to understand that. Most recently, we had someone who came in and spoke to us on real estate of you know different levels of real estate and what the trends are there. So again, the perception is that you come into a meeting and one of the things that I always ask is that you have to give of your time, give of your talents, and occasionally you're going to have to write a check. So the perception is that I come onto the board because I want my name attached to it. That's fine, and I appreciate that. However, there is an expectation that you're going to provide something for us. When I sit down with my skills matrix and I go through each one of the things and I check off, whether it be, as I told you, I have an actuary or I have a CA or I have a CFA, is this is what's going to be asked of you. And also that I want you to show up for the meetings. Okay. You can't just sort of put your name on the thing. So that's perception. On the evaluation, I don't think enough boards do the evaluation side of things.
Mhm.
At the golf club that you mentioned that I'm a member of, I was part of the governance and rewriting of the bylaws and rewriting of some of the policies and procedures there. One of the things that we needed to do was do an evaluation of the board and evaluate ourselves of are we looking after the unit holders, the members of this organization and ensuring that what we say we're doing, we actually do. So that's more in the evaluation. On the action, again, that goes back to are we doing what we're saying we're doing? Do we say please and thank you? And are we showing up? So that's, and then lastly, on the maintenance area that you referred to, is every meeting we go into, there's an agenda. There's a certain agenda items, whether it's reviewing the minutes from the previous meeting. And I think oftentimes people don't understand why you do that because it's when you get yourself into trouble and you have to go back and you have to rely on the minutes, that's when you have your issues. So, maintenance is every year I go back and I look at, and this is more of my governance background, is, when we started the year, we had a bit of a work plan. Are we adhering to the work plan? Did we go off the work plan? Are things that we should have done? Are there things that we can change? And I oftentimes, do that at the end of the meeting. What was that we did at this meeting that allows us to walk away as one voice, one body, and be proud or not necessarily just one, maybe two or even three things that we've done in this meeting, that we've fulfilled our obligation as stewards, but also as board members or committee members.
So I'm wondering if we can. That was really good. Just a really good overview of what needs to be done. I as we head toward the end of our conversation here, I'm wondering if we could talk a little bit more about just sort of some best practices, things that boards can be doing and that people can think of in terms of how those dovetail with their work with an advisor, or if they're just managing money on their own. So the idea of you mentioned earlier, actively seeking alternative views and thinking things through and looking at them as holistically and comprehensively and challenging preconceived notions. I'm wondering if there are other things that you can talk about, identifying your biases and what have you. How can a board work better?
I think being on a board is from the standpoint of, and I think you know me well enough, John, that I'm a relationship person.
Yeah.
And oftentimes you build relationships out of these. And, it's fun to go if, you have an interest, whether it's religious interest or whether you have educational interests or or even sports interest to go and do something that oftentimes we don't necessarily get outside of our comfort zones. And I think that's one of the things that I would challenge people to do. I am a lifelong learner. During COVID, one of the things I did was I did some online programs. I reached out to an individual down in uh, Virginia at the University of Virginia Darden School of Business, and I utilized his knowledge through his books. And I think in today's day and age is that we have an opportunity that I don't, in when we were growing up, you and I think we're roughly the, I'm a little bit older than you, but the encyclopedias that we had, whether they were at home or whether they were at school, and that's what we utilize.
Mhm.
Today, we can go online and we can Google it, we can Bing it, we can, whatever, and we can come up with the different things. We're also in a day and age of changing technology, whether it's software, hardware, regardless. But we have this new thing called artificial intelligence.
Mhm.
And in some cases, it's going to replace the way that we make decisions. And again, I'm not sure where we are. I know that we're at the beginning of it,
Right.
and it's something I really want to understand. But how do I utilize that within a board? One
Right.
of the things that I'm going to be teaching in a program that I'm involved in, Good Governance for Good Causes, talks about the use of AI for fundraising. Are we, we're living in a day and age of, 10, not million, but billion inquiries a day on Google. Okay. How do you organize that information? How do you bring it down to the lowest and then, identify what needs and what's relevant to us? So I think that we've got the tools to do these sort of things. So I look at the landscape is I want to make sure that I'm keeping up to speed of what's going on. Some of the things may not pertain to what I'm actually doing. However, with AI or even what's going to be coming, the Internet of Things, is that I'm actually utilizing, future, and the best way to see the future is to be a part of it,
Right.
but understand it. And that's one of the reasons why I got involved with this education organization. So I'm dealing with groups of students that are science, technology, engineering, and math. So the STEM students out there. And a lot of these students understand concepts way better, way faster. It's the old adage, if you want to fix a website, you give it to a 12-year-old. Well, in this case, I've got some individuals. What they don't have, John, is they don't have the life skills,
Right.
but they are reverse mentoring me and teaching me how some of these things. And then I sort of sit down and start to think, how can I utilize this in this board or in this
Right.
committee or even in my own day of life? Is, when my wife sit down and do our own personal financial planning,
Right.
what is it that's going on out there? So I think, lastly is seek the advice of others,
Right.
and make sure that you think think those things through. We talk about critical thinking, and I think we have to be more critical of the way that we think moving forward,
This
because
is
it's a hyper world. It's a
right.
hyper world that's going on, and it's going way faster in some cases than any of us can sort of see. But at the same time, it invigorates me, really does, and I have a lot of fun with this. And I look at individuals who are 80, 85, who are out there who, like me, are never going to retire, but the retirement's a different, that's a different kettle of fish. What it is what's going to excite me going forward. When I joined, one of the boards, is I wanted to be around people who thought differently than I did, and that would challenge me on an ongoing basis. And I've been able and succeeded in that regard. And I think that I think from a perspective of future board members or even clients that you have, is one of the things that you talk to your clients about is how are they going to leave their legacy? Are they going to leave their legacy to their children, to their family members? Are they going to leave it to a charity? What is it that when we are no longer on this earth, are you going to, what is John DeGooey going to be remembered by, other than the current 4 books that he has out there? I know that Bull Shift is your most recent one, but I'm sure you've got another 2 in there. And I say that sort of tongue in cheek, John. But I think really what it is you've been able to, whether it's your trusted advisor books or the most recent one where you're pointing out, and it's concepts that individuals, your clients and others will look at and say, this makes total sense.
Right.
And then you sit down with them and they say, and this is how it makes sense to you.
Right. Okay, let's wrap up here, Tim. This has been fascinating. I wanted to, as you probably know, one of the things I do at the end of every podcast is I have my guest offer their thoughts on two little segments that I do. The first is called "That's Bullshit," and that's where I ask people to offer their comment about something that they see in the field of personal finance that they think perhaps could be done differently or better. What one thing would you point to?
I would say media.
Mhm.
And we have I don't know how many television stations, radio stations. Now we have podcasts, and again, I'm not casting stones. We all live in glass houses. However, oftentimes I watch the shows that are out there, and I always ask myself, in whose best interest are they acting in?
Right.
And you've got whether it's BNN, Business News Network, or whether it's the American ones. And I sit there and I listen to, and it's interesting you ask that question, because I would use the word that you use slightly differently and may leave out a letter or two when I see some of the people. And these are people that I've been watching for 20 years, for 25 years. And I'm not going to name names because I think some people know who those individuals. We have a number of programs on right now, whether it's Dragon's Den or the American one, Shark Tank, or some of these ones where they pit individuals off against the experts. And I sit down and I go, and whose best interests are they acting in? And I've been extremely fortunate over the years that I've met many of these individuals, whether it's been at a conference. And there is a gentleman out there who I think is by the name of Ray Dalio, and I've been following his principles for 20 plus years. And again, you sort of say, if I was going to go up and over a mountain and follow somebody, who would I do it? And I think the two individuals in the industry that I follow.
Mhm.
One of them was at McKenzie Financial, and the other one was at another fund company. And I had the opportunity of learning from them and learning what to do, but what not to do. So coming back to your exact question, it's the media. They
Okay.
sometimes look at it with a jaundiced eye
Right.
because it may be good for you right now, but is it good for you on a long-term basis?
So the follow-up question then to "That's Bullshit" is shift happens. And shift happens is if you could have your druthers and you could do something to deal with the problem that you just identified 3 minutes ago, how would you solve the problem of the media if it was up to Tim Herron?
I would not. I would not be. That's way above my pay scale, John. Is I oftentimes when and you would understand this is that when markets like 2008 or even last year oftentimes don't pick up the newspaper, don't turn on the television, don't go to that. Think about what's important to you, what's important to your life, what's important to your family. And the solution is not on any of those programs. The solution is not in the paper. But oftentimes, I think what you need to do is that you have to rely on, to a certain extent, your values, your ethics, those kinds of things. So,
Sure.
what I would do and I did this when I was a financial advisor. I would turn off the television or I turn off the screen, and basically step back, go out for a walk, and then think what's important to me right now. And I'll tell you, I know exactly. I went through that in 1987 when my world was coming crashing down on me at that point in time. And all I did was, it's going to get better. It's going to get better. I'm not quite sure. And both for my clients and for myself. And sure enough, we get past this, we get through this.
Perfect.
And that's what I would suggest for individuals.
Great. That's a lovely way to end. Tim, thank you so much. It's been a real pleasure having you on. I want to wish you all the best in your future endeavors and keep on doing all the good work that you do with regard to governance and having our boards be as productive and as purposeful as they can be and operating with high integrity. It's a pleasure being able to speak with you.
Great. And as I say, John, as our friendship over the last 20, 25 years means a lot to me. And I'm glad that I was able to hook up with you and be able to do this podcast today.
Thanks so much. Take care.
Thank you.
John DeGooey is a portfolio manager in Toronto and the author of the book Bullshift: How Optimism Bias Threatens Your Finances. Bullshift is available online and in bookstores everywhere. The opinions expressed in this podcast should not be construed as investment advice. Bullshift, the podcast, is produced by TalkShoe, a division of IOTM.